One of the most advantageous ways to scale is utilizing business lines of credit. People underestimate their ability to scale based on what they do normally in their life. If I go in and I have a business, I have a restaurant, and whatever that restaurant delivers in revenue is my scalable revenue to go out and invest in real estate. If I go out and I own a social media company and whatever that company brings in, that's my bandwidth to scale in real estate. If I own a real estate company and I have X amount of deals going on and those deals produce so much money, that's the amount of money I have to scale in real estate. It's wrong. When you go out and you scale in real estate, there's two variables that you have to take into account. One of them is other people's money, okay? Other people's money is exponential. But right now in the market, the way it currently is, most investors are sideliners, meaning they're not investing in real estate. Bond markets are good. Their money is safe, very secure, very low risk in the bond market. So they're shadow lining and they're sitting on the sidelines just watching, waiting to see what's happening. So when those times happen, the capital becomes very expensive, so much so that it can kill a project's financial viability because it's too much money goes back to the investor. And too much of anything on any one project is bad. Any one variable that increases your overall costs and expenditures is going to be bad for a project. So even though for an investor, they're sitting back going, well, I got a great return on investment. My money's safe to me because I have so much money coming back at me. Yes, but if it puts downward stress on a project, it's worthless because one, we, the developers, ownership groups don't want it because we can't use it. And those that do want it and do use it are putting both that money and themselves at a very high stake of risk. So we sit back and say, okay, that money's not good capital. So the reasonable private money, we sit back and go, okay, we'll take X amount of it. But once we get to a cusp area, if you don't have the ability to leverage additional money from some source, you're halted. So I always tell people, business lines of credit always win hand down when you're scaling. Now, let me explain business lines of credit to you real quick. So we utilize a company called Prime Corporate Services. I'm going to include the link in the body of the post. That way you can actually utilize them if you decide you want to do so. I personally utilize them. And we do what's called credit stacking. And we build business lines of credit through credit stacking. And one of the reasons why is because it gives us leverage. We've been doing this since the beginning of time. Now, I utilized business lines of credit because I had to. I didn't know about it. I wasn't sharp enough to understand it, but I was lucky enough to go in and be doing deposits large enough that it caught the interest of the tellers. And so I remember walking in a Compass Bank years ago, and I would walk in and sometimes I'd have $40,000 of deposits on a Thursday. Sometimes I'd walk in that next Monday and have another $10,000. Sometimes I'd walk in that next Thursday and have another $50,000. Sometimes I'd walk in and have $100,000. And it was concrete projects that were being done, that we were completing, that we were getting payments on, and I was going in and just doing depositories on this money. The tellers took note of it and they came to me and they said, Jerome, have you ever thought about applying for a business line of credit? And I said, no, I don't use those. I don't need them. And the truth was my credit was so bad at the time. I was running around with just over a 460 credit score because of what had happened in prior years of doing business in the late 1990s. So in early years, I was sitting back going embarrassed to run my credit, but I was doing very well financially in the world of business. And so it caught the eyes of a lady named Lisa Wade and Marianne Felix. And so I remember sitting back and they came to me and they begged me time over time again to apply for a business line of credit with Compass Bank. And I told them, nope, 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 nope. And then one day I wanted to build a house back in 1999. And when I went in, I said, well, shit. And I had this attitude that I had everything to win and gain, nothing to lose, because I had already hit rock bottom in business the year prior when the FTC had shut down the company that I worked with. So I sat back and said, okay, so if I have nothing to lose and everything to gain, screw it. Let's just try it. Let these ladies try it. What do I have to lose? Let me just have them try to build a business line of credit for me. I had went in, I had my employer identification number, I had a real business. My dad was doing my accounting. I was starting to pay off bad lines of credit and I was working at trying to rebuild these. So I sat back and I said, okay, what the heck? Let me try it. And so lo and behold, I go in, I'd been in business for a couple of years, second year in business, and we were doing over $1 million in sales. And I went in and truth be told, guys, I'll explain this to you guys in a second, how powerful the business model that we utilize truly is. But truth be told, I went in, I got a $50,000 line of credit almost instantly. And that $50,000 line of business credit, I started utilizing immediately to build a house. Started paying it down, bringing it back up, paying it off, utilizing it, paying it back off, utilizing it, paying it back off. And I did this multitudes of time every month because I was building a house. I'd pay off a lumber package. Then I'd go out and I'd pay off a roof Then I go out and I pay off whatever it was on the house, a lighting package, a plumbing package, and I pay off the credit card. And so what ended up happening, ladies and gentlemen, was I put myself in a position that $50,000 line of credit went to $100,000 of credit in less than 6 months. And so I had this $100,000 business line of credit that allowed me to be able to go in and gain leverage. And so I was able to go and take the money I was making pouring concrete at a time that I couldn't get a construction loan. I wish I could. Some people sit back and they don't listen to what I tell them. I tell them, look, guys, go in and talk to your local banks, your regional banks. They don't listen. They sit back. I said, get a set of plans together before you go talk to your bank. They don't listen. They go back in, they get excited. They go talk to their banks. I sit back and go, why? Why you go talk to your bank when you don't have a lot, you don't have a house, you don't have nothing. But even though you don't have nothing, you're still going to go in and you're going to talk to a bank when you don't even have a real project. I tell people, look, you have to have a real project before you go in and talk to anybody, because 100 out of 100 times, you're going to get a no if you don't have a real project and you don't have something for them to lend on. Doesn't matter if you have an 800 credit score. It doesn't matter if you have a 760 credit score. Doesn't matter if your debt to income ratio is perfect. If you don't have a project, Mr. 800 credit score, you ain't gonna get a loan. You have to have a real project with a real set of blueprints and a real project to be able to get that loan. So business lines of credit, when you go in, are super advantageous because it puts you in a position where you could go in and do not just one of these, but two of these. So take, for example, you go in, let's say that you go in, you get started, okay? We go in, we get a construction loan. That construction loan is on a $750,000 house. Let's say that the proceeds of that construction loan are right around $560,000, okay, in proceeds. Let's do the math on this. We go in, we have a lot. The lot is $120,000, okay? We want the bank with these proceeds to pay for the land. So the lot is $120,000, 120K, okay? Now, people are always worried about expensive lots. I don't worry about expensive lots. I worry about underperforming business models. I worry about the underperformance of comps. Can the house sell in that area? Do comps prove? Is there a proof of concept in that area? And most people sit back and they worry about the price of the land before they worry about the proof of concept. I always worry about the proof of concept, because where are you going to utilize this business line of credit? Are you going to utilize this business line of credit to go out and buy a car with, a house for yourself, a vacation? Or are you going to use this business line of credit to scale, make money, and compound your money and position yourself where you can go out and continue generating larger profits? Now, you compound that money, you take that business line of credit and you leverage it, you're going to make way more money, and you're going to put yourself in a way stronger position to leverage yourself later to scale and make more money, okay? So we sit back and said, I don't worry about the price of the land. The price of the land is expensive. The resale price of the home is also going to be expensive, period. So I always tell people the land should never be more than 20% of the overall acquisition price. So if the proof of concept, the comp, say 750, 20% of that, you're going to be right around that $120,000 mark or less, okay? You stay between 15 and 20%, you're going to be at a really good place. Now, we go in, this house is 2,400 square feet. Based on the average price to build, our houses are a little nicer, so we're going to multiply that price by 165 times 2,400, $396,000, okay? So cost to build is $400K. That's a total $520,000. Now, you're also going to have some closing costs. Those are pass-through costs. Those do not get paid until you actually close on the property. You're also going to have some lending costs. That's going to be interest reserve. That extra $40,000, take care of your interest reserve from that $560,000. Now, the 520, 120 of that's going to go paying for the land, construction costs. Now, you're in a position to build a $750,000 house and in a position to be able to go out and generate profits, price similar to about $150,000, okay? Now, when we go out and do that, let's say it's $750,000 times 6% for closing, $45,000, $45K. We got about $20,000 in lending fees, about $65,000, about $585K minus $750 is our total cost. This is going to equal $750 minus $585, to a $165,000 profit. And remember, this is a simple theoretical example. I can't guarantee you that money because you can't guarantee me if you're going to implement my business model the right way. But I will tell you this, if you implement and execute the way we teach, this is your potential profit, okay? That's what people are doing nationwide. Here's the problem. How do I continue getting this $520,000, okay? You get this through a construction loan, but what if you can multiply that times 2? What if you can go out, create business lines of credit where you can, instead of just doing one of those at a time, can do two of those at a time. And as you continue to compound that, you go out and you multiply this times 4, you multiply that times 5. Now, we're going to continue having profits. These profits can get reinvested in continuing to build. But what if we took these profits and we leverage them as collateral and we utilize this as interest reserve? This money to a bank is worth 9 times over. So if we take that 165 times 9, $1.48 million, $1,485,000. Okay, that means you can go out and build 2 houses, almost 3. You go out, you build that many houses, you have this profitability, your money compounds. You do this times 2, and you have 165 times 2, your lending power becomes $2,970,000. Okay, now these are simple theoretical examples. Not every bank functions on this business model, but a lot do. And so when they're going out, they want the deposits. So when you go in and you collateralize these as deposits, the bank will now start to collateralize those deposits and lend against it, and also give you what's called a revolving line of credit. Now, don't underestimate trade credit, ladies and gentlemen. This is from the bank. Right here, you can do 5 homes, 5 of these guys right here at a time. Now, that's all at one time, mind you. I always tell people, you build 4 of these a year, you're sitting in a really good place. You're in the top 1/100th of 1/10 of 1% of all hit money earners since the history of Adam and Eve. You're doing extremely well. So you do 4 of these a year, get into multifamily. But I'll tell you, if you with just what I'm showing you right here, with doing 2 of these, you have enough leverage to do 5 homes all in 1 year. You take that 2,970,000 divided by 520, 5.7, you almost have enough money to do 6 builds. And all you've done is collateralize 2 homes to be able to have this type of lending power to build 5 homes. Now, there's only 2 ways to lose a business line of credit. One is to not pay it and default. Second is to not use it. So I always tell people, once you gain your business line of credit, utilize it. Even if you only utilize it for 4 homes, just continue revolving that capital. Go in, buy some land, create a holding company. When you go in and you create a holding company, you can have your master company here. Okay, this could be an LLC. Now, this could be your building company. This could be your building LLC right here. Build Toys LLC. Okay, that's my fake name. Now, we go back in here. We do Land Holding LLC. Okay, do a land holding company. Now, we take this one, and now as we start doing 5, so times 5 homes, we're going to start taking some of that money, and we're going to start putting it into your multi-unit, 8-unit LLC. We're going to put this in a multi-unit LLC. This is for multifamily. This is a long-term hold. Long hold. You never want to put a long hold under the same LLC. The reason I use LLCs, not corporations, is because with LLCs, if I want to take a piece of land from here, build on it, and this is a holding company, like if this company gets sued for some reason, you make a big mistake, a customer wants to play games with you, whatever it is, they want to sue you, let them devour that company. Your holding company right there, let that hold the multifamily. That's separate, okay? They can't penetrate this. They can't also go in, and they can't also go and penetrate the land. So you want your land in a separate holding company. Now, when we go in, let's say we have 8 lots in here. How do we get these lots in here? We don't want to go in and just build on that lot under this holding company, because now it puts the whole holding company. So what we do is we quick claim it over to this LLC. Now, when we quick claim it over to this LLC, what ends up happening is we de-risk this one. That holds 7 lots now, and now we build here. Now, if this land goes up in value and you have it in a corporation, you have to assume the capital gains taxes of the land value if it goes up in value, even if you own it, if it's under a corporation. But if it's under an LLC, you don't. So the reason I don't like corporations for holding companies is because you can't quick claim without incurring liability tax-wise. So I like LLCs because I can move real estate for asset protection and to de-risk my assets. Now, we go in, we start building on that asset. Now, business lines of credit, guys. We have 5 homes we can build, and we can build all 5 at one time. When we get this capital, we want to deploy this capital into investments, maybe stocks, more real estate, a real estate investment, whatever it is. You want to get it out of that LLC and into a different LLC. Now, when you come in, one of the reasons I love Prime Corporate Services is because when you come in and you work with us, we'll help you build business lines of credit to scale like this. We come in, we take one profit, from building a house of $165,000. Okay, and we turn it into this type of lending power. When we do it twice, we turn it into this type of lending power. We could build 5 homes. Now we need a structure. So Prime Corporate Services will help you multiply this by 2, and they'll help you set up business lines of credit, real business lines of credit, where you could go in and you could start leveraging the tools, resources, and credit lines that they help you build. And then once you get to a place where you're actually duplicating this, most people are like, I just want to get started. I know you want to get started. But here's the problem, is that building houses and generating capital into this business model is not your largest problem. That's just 6 months, 9 months, a year away. Truth be told, if you put your head down, you execute, and you pay attention, and you run through this business model the way I teach you how to do so, now what you once thought was your biggest problem, and that was money, doesn't become a problem anymore, because now you have it. Now utilizing it correctly is become your biggest problem. How do you protect it? How do you scale it? And how do you go in and how do you position yourself correctly to scale and protect your money? You're going to need a company to do this for you. Most attorneys don't understand asset protection. You can go to a will and trust attorney. They don't know shit about asset protection. And so truth be told, you need the right people. And so the reason I love Prime Corporate Services is because they have a legal team available that we utilize to take advantage of coming in and structuring your companies correctly, okay? That way, when you go out, you build, you de-risk your project, you scale to that 5 homes, and now that we go in and we go into multifamily, people say, Jerome, should I get my LLC on my first build? Yes, you should. Why put yourself under liability? You're going to go in this direction. In less than 2 years, this is what you're going to need right here. Do you have to do all of this at once? No. But you're going to be in a position where you need structure. And ladies and gentlemen, business lines of credit will give you the bandwidth for that structure, but you have to utilize the tools available to set things up correctly. Otherwise, you set yourself up for failure. I can't tell you how many times I sit back and people come in and they ask about this and they will, Jerome, what does this have to do with business lines of credit? I said everything. Because once we teach you to scale, and once you go out and you do scale, you don't want to go out and scale like the average person, where you take $165,000 in profit and spend $225 enhancing your lifestyle. That's what the average U.S. American population does. You're not part of that population. You're not allowed to be part of that population. You're now a part of our build wealth world, where we go in and we teach you guys how to structure money correctly, compound it, and go out and generate more. And so one of the biggest, most advantageous things that you can do is position yourself to structure things correctly. So I'm putting the link to Prime Corporate Services in the body of this video as a tool and resource for all of you guys. It's typically only available for our inner circle and our community. So this one video, I sat back and said, you know what? Let's make it available. Anybody who watches this to the end will also know if they have the availability to utilize Prime Corporate Services as an affiliate for their legal, their accounting, and for their credit stacking, all 3 items, and be able to do it like the pros, exactly like we do. Structure things like the professionals, utilize and leverage your capital and your business lines of credit like the professionals. It helps you scale, because when you scale, you have to structure things correctly. Because if you scale without structuring things correctly, you'll be like the company I grew with back in 1997. We grew too fast. We weren't structured correctly. The FTC shut us down, and we went from being the fastest growing privately held company in American history to the no longer a company in American history just a few years later. And so the biggest thing is you can go in and make money, but if you don't structure it right, what is your end game? So make sure that you guys go through, read the bio, comment down below. Let me know your thoughts on what we're talking about here today. Can you build it this way? Are you going to execute this way? Like, I know you can build it this way, but are you going to? And are you going to continue executing this way? And as you execute this way, are you going to structure your future for asset protection, long-term growth, and long-term profitability? For more content, business and real estate investment hacks just like this, click and subscribe to my YouTube channel. Pound that thumbs up button, give me a little bit of love. And don't forget to drop a comment down below on what you'd like to see next. Until next time, go out and compound your success.